All right, yes. So a breakdown for the spring enrollment, what we've gone over so far. So we've gone over bias mainly, understanding what we are dealing with first. So all we've been doing this week as well, and all we are doing coming into next week as well, is just simply focusing on, can we get very accurate with our bias? So can we understand where price might want to head towards next? If we can get very accurate with that, then of course the trading becomes quite simple if we know how to capitalize on that as well. Now, how do we do that? It's by first understanding the foundational level that we went over, which was Monday, and that was mainly the bias. And that was established through, again, the drawn liquidity, and that drawn liquidity then leads to that direction. The drawn liquidity overall being PDRS. So marking out every single PDRA that we might have on the chart. Then after that, we could study how we deliver from PDRA to the next PDRA through candle signs, otherwise also known as candle direction, the respect and the disrespect. And then from there, we had the two candle rejection as well that we understood. Now, from there, we also understood that, all right, now we can understand order flow. So order flow is, again, those fair value gaps guiding us in price action. The creation of a new fair value gap, the non-creation of a new fair value gap, and how those order flow lags then determine where we might want to head towards. But that is more of a bigger overview, as in that requires a little bit more candles than just candle signs as well. So how do we combine those things to understand what we are actually doing? So what I'm going to do right here is we're going to look at the market mainly from those concepts and from that perspective, and mainly as well doing a top-down analysis. So how I would want to start, if I start on the monthly time frame, which we mentioned in the candle signs, it was the first time we mentioned it, how we combine the time frames. Then on the monthly time frame, I want to focus on fair value gaps as well, but I want to focus less on order flow lags. I want to focus more on actually knowing what the next candle can do. So more based on candle signs. And the reason for that is because I'm not super interested in what the next 5 or 6 candles can do on the monthly time frame, because that is, again, that's 6 years, that's half a year, right? So it's interesting, but I only want to trade the next monthly candle. That's the main importance for me. So how can we know that? Well, if we again go about marking every single PD rate that we might have on the chart right here, then the closest one we have that swing high, we have this fair value gap right there, we have this previous candle high right there, previous candle low, and we have this swing low. And of course, cannot be missed, that fair value gap sitting right there. And when we come into that fair value gap, what do we see on the monthly time frame right here? On the monthly time frame, we see a beautiful rejection, a beautiful respect of that fair value gap. So what can the next candle most likely do? It can reach for the previous candle low. If we now respect that low, then it gets tricky. But if we disrespect that low and we keep on disrespecting discount rates right there, then what will we do? We will continue to target lower discount rates in the form of this swing low, for example, right there. So what can we now do? We can go into a time frame below that to see, all right, do we have anything else that we need to be aware of right here? Well, we have this weekly fair value gap whilst we are coming into that monthly fair value gap right there. So if we, again, mark out every single PD rate that we have right there, let me first delete everything on the monthly, might get a little bit too confusing. Then we see these highs right there, and I'm mainly referring to this situation right here, because at this moment in time, we have this previous candle high, previous candle low right there. And we also, if we pay attention, we have this weekly value gap right there already trade into with this up candle. And this is now again a down candle. This is again a sweep of that first candle. So can we say that that rejection right there has already filled? Well, I would argue yes, because this in itself, if we look at this candle came into the weekly value gap and was that high already. Then came all the way back and then swept the low again right there. So I would argue, well, that lines up with our monthly story of potentially continuing lower right now. So we have a weekly discount already failing. Perfect. Again, an extra confluence that we can add to the overall argument that we want to continue lower. So right here, If we did want to sweep that low right there, then this exact candle right there, should have been an up candle, right? Should have sort of the final line of defense right there. If we did want to continue higher, then that should have been an up candle right there. Did not happen. So right here, what we see is that eventually we can expect lower prices as well, right there, purely based again on the monthly, because the monthly right there is the stronger time frame, of course. Now, what we can do is then go into the daily, and we can understand the daily. What is the daily doing? How is the daily moving, relatively seen towards the weekly and the monthly, of course, as well. Now, on the daily, it was a little bit more difficult right here. And why is this a little bit more difficult? Because we don't really have any daily fair value gaps lower to deal with. So when I rely on fair value gaps a lot of the time, then if there is no fair value gaps, then that's also something I do not necessarily want to trade. I'm not super interested in. It's, again, I live and die by the fair value gap almost. And it's not necessarily a bad thing, because we will also go over different conditions. If there is no fair value gap, then it's already lower probability as well. But what do we see, and what can we deal with? Well, at the beginning of the week, at the start of the week, we had this price action right here. The only thing we currently have is that we are sweeping a swing high right there, and we are respecting that. So that is a great indication that we do potentially want to continue lower. Even if we do not have any fair value gaps lower just yet on the daily time frame, there is no discount array getting respected. The monthly is still showing bearish signs. The weekly is still showing bearish signs. The daily right there is having a beautiful bearish sign as well, in the form of respecting that swing high right there. We do not have daily fair value gaps. Again, I love daily fair value gaps, so I would love to have any form of a daily fair value gap. We do not have that. All right, we can wait a little bit more. But right here, this is only showing bearish signs thus far. So right here, once we then see this sweep, what can we expect? Well, we can now expect this previous candle low to get disrespected and to get traded through, essentially. If we want to reach that previous candle low, then all the swing lows, all the other discount arrays are simply said going to be next right there. And then afterwards, we see this swing low right there being the overall target. So how do we view this? Well, here we close below that previous candle low right there. All right, we are disrespecting, we are still following through. Ideally, what we want to see right now is a new fair value gap being created. We always aim to achieve a fair value gap, a new fair value gap, as fast as possible. So what I mean by that is whenever we have a sweep like this on a time frame like the daily time frame right here, then based on candle signs as well, and what candle signs helps order flow with, is looking at how fast can we now create a fair value gap lower, because that then again shows the overall intention. Do we actually want to continue lower? And that then helps with the overall direction and understanding as well that we want to target lower and lower and lower. So right here, eventually we continue lower as well. And very interesting as well, what can we now see? And the recent price action here is quite important to understand, and it definitely helps with understanding what you can expect coming into next week. We see a run on this low currently. And why is that a run? That is a run because we are now closing below that row, below that low right there. And we are not respecting it. We are disrespecting that low. We are disrespecting the discount array right there. So what is that setting up for? That is setting up nicely with this up candle as well right there to come into a fair value gap right there, overlapping with the low, to then continue lower off of that going into next week. That could be very nice. And that is again how we then use candle signs right now in combination with order flow as well. And then what we want to do in this order flow leg lower, we want to focus on how candle signs tells us the story again of disrespect of that fair value gap to continue lower off that. Because if that does not happen and we do not respect that, we can again see that already through candle signs as well. That's very important. So let's see if we do have any questions before we move on towards the next instrument. On dollar, are these two bearish daily bearish fair value part of the same order flow leg, or is the second fair value create a new order flow leg? It's the same order flow leg, and that's because we do not have a new swing high before we create that second fair value gap, right? So swing high right there, and that creates 2 fair value gaps, then that's the same order flow lag. Exactly, perfect. Let me see, are you just not sure how to draw fair value gaps on daily and 4 hour on both ES and NASDAQ? Are there huge gaps? Do we imagine a long candle to fill the gap, or this imagine long candle should combine with first candle right after the gap? If could you please demonstrate? I will go over it. I'll go over ES and NASDAQ currently. So we understand the overall picture of the dollar right here, or at least have a brief idea of what it wants to do from a bias perspective, and that leads to a candle signs perspective and an order flow perspective as well. We do not necessarily need to go into the 4 hour, into the 1 hour right now. We'll save that for later on as well. Getting into too much time frames can also be a little bit too overwhelming, I feel like. Now, right here, if we then move on to ES and both NASDAQ right here, were quite interesting. I will mainly go over ES and NASDAQ, versus the indices might go over it quite quickly. On the monthly, what are we seeing? On the monthly, we just have overall, we're just continuing higher. Not really interesting in my opinion. There's nothing really to deal with right there. On the weekly, what are we seeing? On the weekly, we had this previous candle high and the previous candle low that we can mark right there. And of course, what we are also seeing is we are failing to create a weekly fair value gap higher actually, which is also something very interesting, right? Because if we do want to continue higher, ideally we should just create fair value gaps higher right there. So if that does not happen, that's a bit suspicious. Then on the daily, what are we seeing? On the daily, we saw something quite interesting. And the reason I say quite interesting is because right here, we had this order flow lag higher right there. And this order flow lag higher, once we came into it, we already saw right here on the 4 hour as well, that we initially did not want to continue higher just yet, which could have led to believe as well that we might want to target that low early on, which I do agree with that thought process as well. And I will say what invalidates that thought process, because when we then have that candle lower, which is where we ended the candle science video, when we have that candle lower right there, then we can look at overall lower prices. How do we want to look at lower prices? Well, we want to look at fair value gaps, now incorporating order flow lags on where we want to continue lower from. So the way we combine candle signs and we combine order flow is candle signs overall gives us a great understanding of what the next candle wants to do. So if you have a good understanding of what the next candle wants to do, then all you need to know is, all right, how can we actually deliver there? And that is what order flow lags are for. So same thing here. If we understand right here on the daily, we want to continue lower. Well, how can we continue lower? That's where order flow lags now come in. Because the order flow lags here on the 4 hour as well, this 4 hour value gap right there, initially, I would argue that is where we are going to then continue lower from. Now, this is where it gets interesting again. Because what do we see? We come into that 4 hour value gap, this one right here on the left first, the bearish one. And we see we're not respecting that initially. All right, can we still continue lower? We might, but overall, the task is now becoming a little bit more difficult because we're not rejecting by any means. So right here, the next candle is a huge up candle as well, creating a 4 hour value gap going higher right there. So this 4 hour value gap is getting fully disrespected to then create a new 4 hour value gap. Whenever this happens, and especially in this situation with the daily as well, and understanding the overall daily scenario right there, that we have been bullish still. So any fair value gaps lower is still a little bit premature overall. Then right here, what we are seeing and what we can see is that 4 hour value gap that disrespects a previous fair value gap is always going to be higher probability right there. So once we see this in itself is of course a great trade ID. Now right here, this is where it gets tricky. And this is exactly where candle signs can also tell you when to just stay out. Because right here, I would argue this is extremely 50-50 price action. And the reason for that is because we are respecting this discount rate, but we also have a huge wick at the top right there, respecting premium arrays. So right here, I would want to stay out until we again get a clear sign that we either want to continue higher or want to continue lower. Now, how can we see if we want to continue lower or continue higher? Again, let's combine that understanding of candle signs with as well a new fair value gap being created. Because overall, what did we see? This in itself is one big order flow lag lower. Then if we want to continue lower, what do we want to see off of any premium rate that might be located in that lag lower right there? We would want to see a retracement into that to then creating a new order flow lag lower, a new fair value gap lower as well. So where can we now create that fair value gap lower? We have this first rejection. Perfect. We get a down candle. All right, nice. We can potentially continue lower off of that expansion candle right there. Then at this moment in time, we now should ideally continue lower immediately to what? To create a new fair value gap lower, to create an order flow lag lower. So when that does not happen, and we can see, again, based on order flow, based on candle signs, the next candle right there trades back into that low, failing to create, very simply said, a fair value gap lower right there. That indicates that again is very tricky, 50-50. I would not argue that that is already a bullish sign. I would argue there has been another bullish argument added to the overall argument, where it's still 50-50. We do not necessarily have to do anything at that moment in time. So if we now wait for another discount array to clearly be respected, that again would then be the sign to then get involved. So what is the discount rate that we have sitting right there? This swing low sitting right there, which we have a beautiful respect right there. And we can simply wait, because if we wait for such a clear candle, then all the next candles are going to be extremely obvious. So it's sacrificing a few candles of price action for the most clear price action you will get afterwards. And that is usually what you'll see as well during heavy news weeks, where we have, for example, FOMC, NFP, CPI all during the same week. Then it's usually smarter to sacrifice one whole trading week to then get a very clear drawn liquidity, a very clear bias for the coming weeks. And it's the same premise here, where here this might not be too clear. And to be honest, to me, it was also not that clear. It's a bit iffy. I'm not too sure what it wants to do right there. I just want to wait for more price action. And then once we start to respect a discount array like that again, in the overall story that we created, which the overall story as well was failing to create a daily value gap lower, that then indicates again that we can definitely look to continue higher. And that eventually creates overall a dominoes effect, where we now have this high to be targeted, and then afterwards we have this high to be targeted as well. And that eventually, which we're going to dive into eventually, leads to no resistance runs as well, because this was the last resistance that we had, which leads to a retracement to then continue higher. And then right here we have every single candle afterwards is quite obvious. It's quite obvious that it wants to continue higher towards that high. It's quite obvious that it wants to continue higher towards that high. And when it is quite obvious, that's exactly when you would want to look for a trade ID. If a bias is not obvious in the first place, candle signs is contradicting both sides of the market, order flow is contradicting both sides of the market, that's the perfect sign that it's, again, the way I want you to see that is oftentimes traders, they think when order flow or candle signs is not in alignment, or they can't seem to understand candle signs and order flow on a certain chart, at the beginning, that will feel like you are making a mistake and you do not understand order flow and candle signs. But if you do not understand order flow and candle signs on a certain chart, that oftentimes is a sign that the chart in itself is not that nice and is not tradable. So you want to stay out of it completely. So that is a very important understanding as well. Yes, this stream will be on the mentorship later on as well, for sure. Will be on the website. So that is extremely important to understand that this, for example, we can force an ID here at this moment in time, but you do not need to. You do not need to force an ID right there. If candle signs is unclear, if order flow is unclear on what it wants to do right there, then simply wait for more clear signs. It's not that you do not fully understand it. It is just that candle signs and order flow is just simply not clear. So we want to focus on candle signs and order flow being clear somewhere else, potentially. That is very important as well to understand. Let's see. In this case, we have to look for a 1 hour value gap inside, 4 hour value gap back. Let's see. So if we would want to continue higher right here, how can we actually move higher off of that? This is exactly where you would look indeed at the 1 hour fair value gaps. But even if you do not have 1 hour fair value gap supporting the ID right here, and we do not come into those 1 hour fair value gaps, then you can even go into the 50-minute right there to look at fair value gaps. Or for example, this move into the fair value area right there and the nested order block right there, that's perfectly fine. That's perfectly fine to trade off of right there to then eventually, again, a bit more advanced. So trying not to get ahead of myself right there. But I know you're already a little bit more advanced, so that's why I go over it as well. That's where eventually right here, you can just go into the 1 minute as well to confirm, again, the same idea with the same premise overall. So that is how I would go about it right there, if that makes sense. Then with this understanding overall, by the way, really quick, this is an all-time high. And I can already get you introduced to all-time highs as well. The way I like to trade all-time highs is I simply don't. I don't trade all-time highs. I don't like to trade all-time highs unless we get a very clear top in the market. So for example, at this moment in time, we also had an all-time high right there. But this is a very clear sweep to potentially continue lower a little bit. And potentially what I had in mind right there to potentially continue lower towards those lows right there. So that is a very clear top to me. But unless we have a very clear top or we have a big retracement, like we also saw right here, this is a big retracement right there because this overall lag lower right there. Then we have new highs to target in the form of new all-time highs. But when we are above all-time highs, I do not necessarily want to get involved anymore. I am not eager to get involved anymore. That is simply because if we look at this from a very, well, logical standpoint, more psychology standpoint as well, whenever we are at all-time highs, it becomes quite difficult to not chase price. It also becomes quite difficult to not call a top in the market. So we do not want to call a top in the market. That's one of the basic or foundational rules. You could also argue we do not want to call tops in the market, and we also do not want to chase price. So those two things, they happen above all-time highs. So that's very important to understand as well. Now, right here, eventually, we see that the nicest price action overall is now past us. It's not that interesting anymore. And this is exactly what I mean as well with I'm not super interested in trading an all-time high simply because oftentimes you will see price action like this, where it's just messing around. It's first taking out buyers, then it's taking out sellers, then create a real top in the market, for example, like this. I would argue this has great arguments right there to be a real top. Now, for this to be a real top, we can then just simply wait for new fair value gaps going lower as well to confirm the order flow continuing lower. That is how I would approach an all-time high as well. Then, if we move on to NASDAQ, let's see. Let's see if we have any questions. All-time highs is uncharted territory, is risky business. Exactly. It's you can't get a clear or accurate representation of what we actually want to do. And then we could make the argument, and I've had this question before as well. Then we could make the argument, well, we can use Fibonacci's, right? To me, Fibonacci's itself are just not accurate on its own. As in, oftentimes Fibonacci's you will be told, but combine it with price action to the left, combine it with this, combine it with that, and combine it with an overlapping PD ray. So then Fibonacci itself for me is not relevant. The PD ray again is relevant. So the Fibonacci to me in itself is oftentimes just very inaccurate for me to actually use it. Let's see. It looks like you are using logarithmic scale. Any reason for that? No. No, there's not any there. No, there's not really a reason for that, to be honest. It's yeah, I've just always had it unconsciously, so I was not even aware of it, to be honest. Let's see. Fib extensions is like throwing darts. Fib extensions is like, yeah, that's a very accurate representation. It's like Fib extensions is finding reasons why it might work until you actually get an example that it works perfectly. It's like it looks very nice when it actually plays out one time, but in my experience, again, just doesn't work. But if it does work again for someone, then again, I can't argue against that, right? I can't argue against that. So right here, if we look at NASDAQ, let's see. If we go over the monthly, it is again very similar overall towards the ES situation. Weekly as well, very similar, where it becomes just this very suspicious price action overall. And what I'm trying to get your mind to see as well is that at this moment in time, we are not creating new preferred gaps higher on the weekly, both for NASDAQ and ES, and we are at an all-time high. How long will we stay at an all-time high? Well, what are first signs that we might want to retrace? Well, that is the failure of now creating new preferred gaps going higher, because very simply said, if price wants to continue higher and it will simply have the intention to continue higher, it will create fair value gaps higher. And if it does not do that, then eventually that shows a lack of intention continuing higher. So that are early signs that we might want to continue lower. But that again is extremely premature. And what we have to understand right there is that we need to have some higher time frame order flow actually supporting that ID. And as long as we do not have that, then it's all it is. It's a premature statement. So we can still look to continue higher as well. It's again, what we're eventually going to go over is this will all lead to understanding arguments in the market. When we are creating an argument in the market, we are creating bullish arguments and bearish arguments, where we need to understand which side has the better argument still. And until we have any clear order flow signs continuing lower, the bullish side will always have more arguments overall. So we can get very early on trying to call a top in the market, but we do not need to do that because the arguments are still not supporting the ID. So that's usually the difference with where a lot of people, it looks very fancy when you try to call a top or a bottom very early on without having any arguments supporting the ID still, but it does not pay out a lot of the time, as in it's not very profitable to actually do that. So right here on the daily, what are we seeing? We're seeing a very similar scenario on ES. So again, it's overall the same scenario as well. The only difference I would argue right here is that we are now creating a daily fair value gap right there lower, which we could come into to potentially even continue lower right there. So how do we approach that? Let's go into the 4 hour as well. And when we go into the 4 hour right here, we already see that we are creating a bullish fair value gap going into the daily fair value gap. That's not necessarily a bad thing. But what do we see? We see that we have this first candle, somewhat of a rejection. Now, would I say, well, I would argue at that moment in time that we can still sweep that previous candle high right there to then continue lower. I do not necessarily think this is the biggest of rejection and we can't sweep that candle anymore. But how do we know right now that we do not want to respect the daily fair value gap? Well, if we do not sweep this previous candle high. So what do we see? We already right there close above that previous candle high. Now, eventually we will get to an understanding and we will get to such an advanced understanding that we do not need to wait for that 4 hour candle to close. We can already see on the 50 minute, on the 5 minute time frame, once we are not sweeping that high anymore right there, and we are running the high on the 5 minute time frame before closing on the 4 hour, we can already know if it wants to continue high right there or if it wants to continue lower. So eventually, I want to also get you to the understanding that you do not need to wait for candle closes eventually, because eventually we are going to see that from the lower time frame, how we can already know how the candle will close before it actually closes like that. That is where order flow also comes in on the lower time frame. So eventually we have this 4 hour value gap right there higher. We do come into that, which to me, we are quite close to the drawn liquidity overall. That retracement is quite a heavy retracement, but we are again respecting that right there, which we can also look to then continue higher off of and just follow through on the order flow towards that all-time high. Once we reach that all-time high, what are we seeing again? A huge sweep right there. So we have the first candle, not necessarily rejection. Second candle is actually a rejection right there, continuing lower, creating also a bearish value gap, which again, to me, it is showing again arguments. It is showing signs that it potentially wants to have a bigger retracement in the form of something like this as well. But again, that's something we will look at next week, going into next week. So let's see if there are any questions. We're calling out all the OTE enjoyers. Yeah, OTE makes sense, as in it makes sense. It's not too bad, but it's usually also just seen from, do we have an overlapping defense? Do we have fair value gap, etc.? Which, I don't know. On the lag down, on the 4 hour ES, when does that become a lag? As soon as there's a sweep and swing high. Let's see. So as soon when it becomes a lag, essentially, and I think you're referring to this one right here, right? When that is a lag whenever that swing high is getting confirmed. So as soon as we have this right here, we have 1, 2, 3 confirms the swing high right there, and at that moment in time also confirms the fair value gap low right there. A fair value gap is not needed to create a lag, but if we want an order flow lag, then it should have a fair value gap. If we want a high probability lag, then it should have a fair value gap in itself. So this, for example, is also a lag higher. The reason it's not high probability is because it's not fair value gap higher in a sense. So this swing high right there, this, yeah, as soon as there's a swing high, sweep and swing high, essentially, yeah. How do we use news when it comes to futures? Then moving on from that towards YM right here. I do not necessarily want to go over YM and DAX right here. It's overall quite similar to what we saw on ES and NASDAQ. If you do have a specific one, a specific pair or instrument that I'm currently not going over, then feel free to let me know in the question section or whatever it may be, and we can also go over that as well. Let's see. On Australian dollar, US dollar right here. This, of course, what we saw during the candle signs video as well is extremely interesting. And I mainly want to go over again that understanding of the run on liquidity versus sweep on liquidity, and also how candle signs here then supports the ID of overall order flow. Where candle signs might give you an ID. So you start off usually on the higher time frame with candle signs right there. But of course, order flow can also come in handy. But usually you start off with candle signs. After candle signs, you have an understanding of what the higher time frame candle might do. Then to understand what the higher time frame or how we can deliver on that higher time frame candle premise, we want to find an order flow lag to actually support that ID. So what do we actually see? We see right here that on the weekly, we have this weekly value gap, which we can already see that is not rejecting, right? We have one time continuing lower, that we could argue is already rejection, closing below that weekly value gap. Then this is not sweeping that, it's not sweeping the high to then continue lower off of that. And then we have a down candle right there. That down candle is not going to fake anyone. It's not going to fake us, at least. It's not, we already see that right there, that fair value gap is just not strong enough to push price lower. And we can already see by the 2 candle rejection. So we already know that simply is not strong enough. So right here, once we then go into the daily, and by the way, on the weekly, that is the previous week low, or sitting right there. On the daily, it's a swing low. So whatever your personal preference might be at that moment in time, swing low to me is always a little bit more clear, of course, because there's just simply more candles as well. So right here, what we see is we have this respect of that swing low. Now at that moment in time, how can we know that that respect is actually forming? So now we're diving into a little bit more advanced material as well. How can we see that that candle will form like that actually? Well, if we go down one single time frame, then below this low right here, below this low, if we do not want to see a sweep like that, if we do not want to have a daily candle close like that, how should the 4 hour right now act relatively seen to the daily time frame? Well, the 4 hour should ideally create fair value gaps lower in an ideal scenario, perfect utopia world. We should create a fair value gap exactly overlapping with the low that we just took. Why? Because that indicates that there's almost no real arguments that it might be a sweep in the first place. Where right here, the first argument that this could be a sweep is just that we do not have a fair value gap overlapping with the exact low that we just took. That's the first actual sign that it is a sweep. Is that a confirmed sweep? No, because right now we need to first disrespect any chance that we might have to continue low right there, and we need to respect any chance that we might have to continue higher right there. So when we disrespect the premium raise and we start to respect discount raise right there, indicates again a confirmed sweep eventually. So right here, eventually on 4 hour, we can go into the lower time frame right there to see we're now respecting that 4 hour value gap, and based on candle signs as well, you can see we are respecting that 4 hour value gap to then continue higher off of that as well. Where candle signs gives you an ID, as in if candle signs closes like this right here, order flow right now supports that ID to continue higher right there. That's exactly what you would want to see. That's the perfect combination. Candle signs give you an ID. The order flow confirms the ID on how we actually are going to deliver right there. That is where we eventually continue higher as well. And what I would love for you to pay attention to is right here, the close above this high. That is exactly what I was talking about right there. That once we have a close like this and we are creating the next candle, a 4-hour fair value gap above a high right there, that of course indicates that we are actually running that high. We have no interest in coming back below right there. Where the difference between the sweep versus a run, that's a beautiful textbook sweep versus a run on liquidity right there. And eventually, once we have that run, and why is that run important to understand? Because right now we can just mark out all the other premium arrays that we have sitting right there, because those will now become the next target. Because a run on liquidity, essentially, what does that mean? A run on liquidity means that we are disrespecting a swing high or swing low. So we are essentially looking for a further premium or discount array. Where sweep on liquidity, what does that mean? We are respecting a discount array, in this case, a swing low, or respecting a premium array, in the case of when we are looking at a swing high. So that indicates then, if we are respecting a discount array, that indicates, all right, we might want to target instead a premium array. And when we disrespect the premium array, we will look to target higher premium arrays in the form of that swing high and that swing high as well, right there. But eventually we deliver towards that as well. How we can exactly capitalize on that is again where we are going to, we need to go over order flow. And again, capitalizing right here on the IDs is not the main importance just yet. We understand this and we could just know and focus on where price actually wants to go. And eventually the capitalizing will always become quite simple. Quite simple, yet not always easy, of course. Let's see. I'm pretty sure it says on the future pairs if it's a copy of Euro USD, for example. Yeah, if you want to trade Euro USD for futures, then it's just the euro currency, because it's just always moving the opposite of the whatever the US dollar is doing, essentially. Are there more scenarios when the 2-candle rejection would be more practical to use? Or is it solely for understanding higher time for price action after it happens? I'm struggling to find a proper, more practical approach use with this in real-time scenario, apart from the sweep of the previous candle high to then continue lower or higher after we sting into the period. What has been the use of this from your experience? Yeah, I think that's a lot of the downfall, and that's really what I'm trying to avoid. Where the downfall, the biggest downfall. So if you're hearing this, then you already have an advantage of someone who's not watching this live and who's not hearing this. The biggest downfall is simply for people waiting for it to be after the fact, where this is focused on real time. And what I mean by that is that candle signs, the way the candle will form eventually is shown through order flow on the lower time frame. So the biggest downfall is waiting for those candles to form on the higher time frame. For example, right here, waiting for this to be a reject candle to then waiting for that to be a respect candle, because then you've essentially already missed a move. Where we now need to get to an understanding of 4-hour right there, because the 4-hour is what we can actually capitalize on. So eventually what we want to get to is, again, that candle signs seen through order flow on the lower time frame already. So we want to know how the candle will form by looking at how the candle on the lower time frame forms. So candle signs in candle signs. So lower time frame candle signs is a bigger higher time frame candle signs, which eventually leads to understanding how the bigger higher time frame candle will form as well. And why this is useful is as well because if we now have this daily right here, only this rejection right there, and we expect the next candle to continue higher, then if this candle starts to continue lower already, which can be seen then by 4-hour, by 1-hour for value gaps continuing lower, that is exactly when we can say, all right, we do not have that candle close just yet, but we do have a failure of that rejection, which is very important. So in the next part as well, or eventually what we're trying to work to, is this in itself can be used for entries, of course. So right here, if this was a 1 minute time frame, for example, and you were looking at a sharp turn entry, then this in itself can be an entry with covering that low right there, targeting those highs. And that in itself, imagine if this was on the 1 minute, that in itself can also lead to eventually an entry, lead to the understanding of risk management, etc. me see. It's like you're trying to know too much as opposed to, okay, cool, I have low time from order flow, CS supporting the ID, let's go. Not sure what you mean with that. Let me see. All right, did you take a 1 hour bag yesterday on GBP Canadian dollar? I did not actually. I did not trade GBP Canadian dollar. I did see it play out. We can quickly go over that as well, GBP Canadian dollar, because it was quite interesting. Let's see. All right, if we look at GBP Canadian dollar, let's see. We are looking to continue higher towards the swing high right there as well, and then eventually towards these highs right there. Why? Simply said, candles have been going higher, respecting discount rates overall, disrespecting premium rates more likely. Then on the weekly right here, we are seeing, we also don't really have anything interesting right here, but we are overall continuing higher. This is a scenario that we talked about on the order flow right here. And when we look at this order flow, we eventually come to the conclusion that we have this fair value gap sitting right there, which we can continue higher off of as well. Now, we mentioned that if the first candle does not reject immediately, then what can the second candle do? We can right there, we can look at the previous candle low right there to sweep that to then continue higher off of that. So again, eventually what we want to work to, I'm saying eventually quite often, but what we want to work to is we want to work towards understanding that that right now is a discounted rate. So going into the lower time frame already when that is getting swept, not waiting for this candle in particular. No, already trading that when it's forming right there. That is very important to understand. So right now we can continue higher off that, especially after we have that up candle, of course, which is just after the fact, just an extra confirmation. Okay, we actually do want to continue higher. So right now, if we find any discount rate that we do want to continue higher off of, on the 4 hour, we did not necessarily have anything interesting in my opinion. Then right here, this was my main interest right there, that fair value area. We're not necessarily respecting it just yet. Again, this is where we also need to go over overall time to understand why we are not respecting that just yet and why we can sometimes disrespect certain PDRs before we actually continue higher. But eventually we continue higher right there. Personally did not catch this trade, but right here, we then look to target these highs as well, sitting right there. Overall, quite nice price action right here based on candle signs and order flow as well. Let's see if we can go over a few more interesting ones as well. EU, not necessarily too interesting to do anything right here in my opinion. Let's go over silver as well a little bit, and we quickly scroll through it. I mainly wanted to go over silver as well, and then a little bit of Bank Nifty again to reinforce those IDs as well. Now silver, let's see. Silver we talked about, of course. Let's reinforce those IDs as well, and we talked about this in the candle signs video. And right here we are looking to continue higher overall. We can see we are respecting the previous candle low. This is a nice little detail to potentially continue higher as well. Then on the daily, what are we seeing? We have a huge move continuing higher. Overall as well, confirming order flow, right? We have this first order flow leg higher. After we have this next order flow leg higher as well. Then we are running into a target right there in the form of swing high. So just simply said, a premium array. Now, once we run into that, we see a nice rejection. That rejection is not to look at lower prices. Well, if we were to create a bearish fair value gap on the daily time frame right here, then we could look at bearish prices. But in the meantime, there right there, at that moment in time, it's still just a retracement to continue higher off of this fair value gap and off of what we also had, the fair value area right there. So what do we see on the 4 hour? On the 4 hour, what we mentioned again is we already have the first candle rejection sitting right there. Next candle ideally should be an up candle, right? To continue higher. We do want to continue higher, respecting the lows of those candles. Now, then we run into this 4 hour value gap, which is again, this is what we're eventually going to go over as a 50-50 area. So between two rejections, so between two rejection areas, between a premium array and a discount array, we will have at the premium arrays and at the discount arrays, we will have two candle rejections. And when we have two candle rejections, that also leads to the understanding that we are in a 50-50 area when we have two candle rejections on both sides of the market. We have a 2 candle rejection right there, but also right there at the premium rate. So that is, when this moment in time, that's 50-50. This is 50-50 price action. And this is where we will run into resistance. So that is why it is 50-50 price action, because we are running into resistance. Now, eventually, once we then, and the way we want to look at this based on candle signs, so how we want to capitalize on this based on candle signs in real time and not after the fact, is if we want to continue lower right here, any fair value gap that we will have lower at this moment in time should hold. Why? Because that will create the next candle to be actually a down candle. So any fair value gap lower right there should hold. If that does not happen, this in itself in real time is already now this rejection failing, which leads to the understanding when this rejection is failing, then what is that? This fair value gap is failing. We have no other significant premium rate again on the 4 hour, which means that we are now heading towards that high all of a sudden. That again is a dominoes effect, which can be spotted very early on. So in real time, this 4 hour candle right there is again that 4 hour candle. If it wants to continue lower, then the next candle should be down candle. If this candle continues lower, again, what is that candle on the lower time frame based on candle signs in combination with that order flow? It's already fair value gaps lower. So fair value gaps lower right there should hold, because that will then eventually create the next down candle as well. So right here, what we see is these fair value gaps right there in itself are already quite interesting to look for a trade ID to continue higher off of that right there. So eventually we deliver higher and we continue higher as well, delivering towards the highs right there. And that is how we eventually want to get to that understanding. Eventually. All right, now right here, after the fact, this is where it gets more tricky as well. And this is a big topic that we are going to go over next week, where we need to spot high probability conditions versus actually low probability conditions. So what is high probability order flow and candle signs to actually play out versus low probability order flow and candle signs to play out? Well, that is what we need to go over as well. But for example, at this moment in time, we can see that we are now sweeping a high like that, especially seen on the 4 hour right there. We are potentially respecting the high, sort of sweeping the high. It's a potential sweep, right? It's not necessarily sweep, it's an early sweep. If we now create a bearish fair value gap right there, then we can state that it is indeed a sweep. Now, how do we approach this? Well, at first moment in time, you just simply want to stay out and you do not want to do anything right here, because this is 50-50. If we were convincingly moving higher, we should have, again, remember that run on liquidity, like we mentioned on Australian dollar, US dollar, we should create fair value gaps overlapping with this exact high that we just took right there. That's the highest probability thing for price to do. So then, once we do start to show bullish signs again, eventually, then we can look to continue higher. But we see that we are constantly struggling, and this is a great sign of low probability conditions. We are constantly struggling to actually create fair value gaps overlapping with the highs that we took. And why is that low probability? Because the intention is not there anymore. And what I mean by that is when we have a clear fair value gap above a high and closing above a high even, and we have clear intention, that of course signals that we overall are just simply said more bullish. And this right here signals that we are less bullish because we are struggling to actually continue higher in that sense. So that eventually leads to low probability conditions as well. Let's see. We have any questions? Breakaway gap. Yes, back is just breakaway gap. I did a deep work session on this today. After the sweep, the candle closes with a long rejection wick. Price should return to take out the high and low, which is already an entry plus SL on the lower time frame. It would be an ST anyways. Exactly that. Exactly. And that's the perfect understanding. And that's eventually what we want to work towards as well, because that is essentially it. We are looking at our entry model, for example, based on a singular candle, which is very interesting because that could lead to already entering on that singular candle itself. So this, for example, in itself could be a trade ID whilst not even going into the lower time frame, but can also be a lower time frame entry. So what is your personal preference there? That will be very interesting. Let me see. Yeah, hopefully that's more clear as well, how we can use the candle rejection in real time. In real time, what we do with that information. Hopefully that's more clear. Let's say the price action on silver was different and we price had nested bearish order blocks on the 4-hour. Would you also want to wait for those rejections before looking to get involved on the lower time frame? Yeah, really depends on the scenario overall, but yes, ideally yes. But then it becomes the same sort of price action overall, because if we, let's say, had another order block a little bit higher right there, then we would still want to wait for the rejection, but that rejection eventually just leads overall to understanding as well. We will continue higher off of the order flow that we have right there. So how can we view that? Well, it's quite similar towards this scenario, where let's say we came into an order block sitting right there, then we can wait for the rejection first, and then after the rejection fails, then we can confidently get involved. That's where the best entries then happens, when the rejection fails. So instead of getting involved, for example, off of this right here, because here the rejection is about to happen, so this in itself is not really a good entry in my opinion, because we have a 50-50 area coming up right there, the first 50-50 area. So what would you want to do? Well, wait for the rejection to fail, and when the rejection fails, that right there is a lot higher probability, and you'll see the faster price action happens right there because the rejection also fails, if that makes sense. That is the same how I would approach it with any order block that we might have right there. Let's see. I think entering on the candle itself is valid when it's rejecting off an overlapping gap instead of a singular fair value gap. That's true. That's true. What if there's not a rejection but still bullish fair value gaps in a lower time frame being created, completely disrespecting the 4-hour value gap, still high probability? Yeah, essentially, yeah. Because then we never have that rejection in the first place. So if we never have that rejection in the first place, which again is also seen by indeed lower time frame fair value gaps just being created, that's still high probability. Exactly. Yeah. Well, is it a high probability as in we could argue that we do not know if the rejection is still going to happen, where in this scenario we already know the rejection is going to happen, so it's already definitely past us, right? So then which one is the higher probability? I would argue even this one might even be higher probability, because we can confidently say the rejection is past us. But I still believe the fair value gap is going higher without having any rejection. That can still be traded for sure. The first time we sting or go into a fair value gap, is it safe to expect that it would reject or not get disrespected? Yes, exactly. So that's ideally as well what we are working towards. So whenever we have a fair value gap, well, it really depends on the scenario, but a fair value gap in context, let's say a fair value gap in context. A fair value gap in context is where we want to, we already expect that fair value gap itself to actually hold. So we expect that fair value gap itself to already be high probability to actually potentially have a rejection and continue lower, continue higher. So then we want to go into the lower time frame to find simply our rejection, etc. So we already expect it to reject off of that fair value gap. Yes, exactly. Because sometimes no rejection occurs and it just continues higher. That makes me wonder if we could see sudden ST after retracing deep into the 4-hour value gap. At these times, I miss the move waiting too much sometimes. Yeah, oftentimes it's a very similar scenario like this. Like ES and NASDAQ. Where this scenario, we have this daily fair value area right there. And once we come into that, we can wait for the daily candle close right there, but we already have fair value gaps actually continuing lower. So what I like to look at right here is simply look at the discount rate from that daily fair value area, this nested order block, although again, I prefer the overall fair value area. Then what we see is this candle tries to reject right there. There's a little small wick. And that wick right there becomes very important. Because if we now want to continue higher, then the only thing we can really do is sweep this previous candle low right here to then have this up candle, which you can see we are doing the exact opposite. So then it becomes fractal rejections. It becomes small rejections right there, where after this, now we can confidently say, all right, well, let's find any 1-hour value to continue lower right there to continue lower off of that, if that makes sense. So then in that moment, I would more so look at the small rejections on the time frame below it, if that makes sense. All right, let me go over Bank Nifty. That's the last one I want to go over right there as well. And then I'll go over, for example, GBPJPY right there. Let's see. Again, reinforcing the idea right here. And I want to reinforce the idea as well that there's a lot of variables going into concepts that we use. And why is that? Because right here, we are not creating a monthly value gap higher. Does that mean that we are automatically bearish right there? Well, I would argue if we get a weekly value gap lower, there is definitely a good argument that we want to continue lower. But what do we see here on the weekly? We have this weekly fair value gap sitting right there as well. And once we come into that weekly value gap, we try to push lower. Second candle tries to push lower as well, which is seen nicely right there. This is a beautiful rejection, right? Beautiful two candle rejection. Now, if we look at this, we are respecting this previous candle low. What do we want to see? We want to see this next candle. Ideally, we want to see again a new fair value gap lower being created as fast as possible. So right here, what we want to look at on a lower time frame then is look at fair value gaps that are pushing lower. All these fair value gaps should hold. And when this fair value gap right here then starts to fill, which we can already tell early on by candle signs right there, then what happens? Well, this becomes the target. This becomes the target. This becomes the target right there. Weekly value gap right there is now failing. Okay, this becomes the target right there. And eventually, that becomes the target. That creates, again, one of the craziest, one of the quite rare, to be honest, domino effects that you might have right there. So eventually, looking at the fair value gaps higher, that creates very easy and clear targets when just one singular fair value gap starts to fill. And if we go even way more in depth on this, let's look at this 4-hour candle, 4-hour value gap right there. Let's look how we can find that early signs that actually does not want to hold. Well, I can already see a very early sign. And a very early sign is that we do not have a fair value gap exactly overlapping with that low that we just took right there. Again, sweep versus run on liquidity. If we are sweeping a low or a high, then usually this right here is the case. Can we confidently say that that is going to be a sweep? And do I already know by just that fair value gap, that fair value gap not overlapping with that exact low, that we are now going to take out all those highs? No, definitely not. 100% not. I cannot know that at that moment in time. But I can find early signs. And when we start to stack up those signs, where this is the first sign, after that, it's a fair value gap continuing higher. After that, we are now closing above those highs, etc. We are respecting those fair value gaps. That adds up. And the more signs we get, the more high probability is going to be to actually then look at targeting those highs right there. So at this moment in time, I would argue we are still overall bearish. But let's look at the 1 hour right here. What are we doing? Let's even go into the 15-minute actually, because that will be quite interesting. And this is the reason it is quite interesting right here. That's eventually what we're going to go into in how we combine time frames as well. But what are we seeing here? We are seeing that we have a reject candle. We are rejecting off of this 4-hour fair value gap right there. So ideally, we should just look to continue lower right there, create a new fair value gap lower, ideally as soon as possible. That fails to happen. We now take out the rejection, and more importantly, we also close above the previous candle high. This is now the earliest sign that we can get, and where we can pretty confidently say that we are going to target all these highs right there, where it creates a very rare but beautiful phenomenon where one early sign leads to everything falling. And then on the 5-minute, again, you can get even crazier with this, of course. Can I even go into the 1 minute? On the 1 minute, if we want to see this next 15-minute candle be a down candle and create a fair value gap as soon as possible, then what should happen? On the 1 minute, that should then lead to the understanding of, okay, these fair value gaps should hold. So is it currently holding? Well, it's a bigger change. I would argue it is quite holding right there. So right now, if we start to have candles like this, disrespect that, this in itself is now on the 1 minute, the earliest sign we have right there that we are going to target all those highs. So the reason that's important is because this is candle signs then seen very prematurely, because now we are basically looking at, what are we looking at? At the weekly up candle that is forming. So we already knew by looking at the 1 minute, the earliest signs possible, that this weekly candle right there is going to form like that, most likely. And that is exactly how we then eventually combine order flow candle signs to get to that understanding as well. Now, that of course is where we create weekly value gaps. We continue higher off of that as well, where it all becomes the same thing constantly, where it's constantly looking at, are we respecting premium rates? Are we disrespecting discount rates? Or the opposite, are we respecting discount rates? Are we respecting premium rates? We're constantly doing the same thing over and over and over right there, where here we just continue higher. What are we continuing higher off of? This weekly fair value gap right there. And we can even make this argument, right? A fair value gap should always convince us to get involved, to press buy or sell. So usually when people get into trading, and oftentimes from my experience at least, it's like I was convincing the market that it needs to do something. No, the market needs to convince us to actually place an order in the market. So if the market is not convincing us, then, well, I don't want to do anything. I'm not interested to get involved. So how can the market interest us to actually make sure that we place a trade? Well, that's just simply looking at, do we now have more bullish arguments than bearish arguments? So once we come into this weekly value gap right there, what do we see? First candle on the daily right here, I would say that's a reject. Or sorry, not reject, sorry. Disrespect is not rejecting. Then the second candle right there, previous candle low sweep to then continue higher off that. So what does that look like? Well, on the 4 hour right here, we can eventually go lower and lower and lower, and we can find the earliest signs of disrespect. Well, on the 1 hour, we can already see something. 1 hour value gap right there continuing lower. Here, we fail to create a new value gap continuing lower. And we create a new bullish value gap continuing lower right there. Then we have this 1 hour value gap lower sitting right there, which has not been traded into. So overall, if we want to continue lower, we can still continue lower off that. Does this remind you of something? Because this reminds me a lot of this price action right here. With this candle right there on ES, coming into the 4 hour value gap, coming into that 4 hour value gap right there. That is the first area where if that fails right there and we can find early signs, eventually we just have it a very easy going. We have a very easy time after that. So right here, how can we find early signs of what wants to hold? Well, if this candle right now wants to be a down candle because it's already rejecting that first candle, then again, on the 1 minute, we can simply find fair value gaps going lower, where eventually the earliest sign right here, and as crazy as it sounds, is this fair value gap right now failing and creating again a bullish fair value gap off of that. Or eventually that leads to bullish price action right there because of that 1 minute fair value gap failing. And then this high becomes a target, but after that, not only that high, right? Because now we almost have it confirmed that we are indeed going to continue higher, and that we can now confidently say that this weekly candle is going to be an up candle right there, and it's going to target that previous candle high. So all you would need to do after that is find any fair value gap on the 1 hour, on the 15 minute to guide you towards that high right there. Find any manner to get involved, and that in itself is already a trade ID. And if you want more confirmation, then what do? Here we have a fair value gap right there. And we go into the 1 minute again. Let's see. What do we have? 1 minute, does it want to follow through? Well, we have this 1 minute fair value gap sitting right there. If it wants to follow through, we create a new 1 minute fair value gap. Perfect. It's absolutely perfect. So right there, if we want to continue lower, this is perfect. And then right there, it shows bullish price action. Creates a new bullish fair value gap. Order flow confirmed. And that is exactly, and this is also quite interesting, by the way, because this again is that resistance right there. After that, the no resistance run right there happens, which we're also eventually going to go into. I think I already went into the advanced stuff a little bit more, a little bit deeper, but I do not think it's harming people. Let's see if we have any questions. Could you please give us feedback on GBJPY? Yes. 4 hour time frame with the fair value area. Let's see, 4 hour. Oh, picky about my broker. Let's see, forex.com. All right. Overall, get an understanding of what we want to do as well. The monthly, failing to create a monthly value gap higher. Weekly right here, coming into a weekly fair value gap sitting right there, which does have fair value area right there towards the left and a nested order block as well, supporting the idea of potentially continuing higher. So on the daily, we already have a rejection actually right there to potentially continue higher off of. On the 4 hour, what are we seeing? On the 4 hour, we have this fair value area. And this is exactly what I mean with overall 50-50 area. This is very 50-50 price action at that moment in time. So we want to either get again those signs, for example, right here. If this 4 hour value gap right now fails, and we can see that failing by having that candle lower, potentially going into the lower time frame right here. If this 1 hour value gap, which definitely has signs of it, starts to fill right there to then continue higher right here, then everything starts to fill, and I would argue the fair value area itself is already low probability to then continue higher off of whatever the weekly was doing right there. So to me, this is quite 50-50. I would not necessarily look at the fair value area to continue lower here on the 4 hour. Definitely looks quite interesting to potentially continue higher though, because the higher time frame is supporting that ID, if that makes sense. Let's see. Thank you, Ario. Okay, look for small rejections in the time frame below is a nugget here. Exactly. That's the one. That's the one. Candle signs plus order flow is beautiful. It is. 2 candle rejection all the way down to the M1 in it. Exactly. Ideally, yes. That's what we want to do, what we want to work towards eventually, of course, depending on the trading plan, but that's where it gets extremely effective. Yeah, rookie numbers compared to your NFP trade. Exactly, better for you, bro. All right, if we do have any questions, if there are any pairs that you might, that you were looking at this week, and you were not sure what it was doing, then we can of course go over that as well based on the spring enrollment right here. Not necessarily too advanced, at least I'm trying not to go too advanced. And then from there we can work as well. Reliance is beautiful. Aria, was there one thing that made you switch your whole mindset around trading and start your journey to profitability? Yeah, I don't know. Funny enough, it was sticking to the same thing, and it's such a cliche. I mention it so often, but it was when I decided to stick to the same thing, and I was just like, all right, let me just study this. I like this. Let me just study it. Let me just use it over and over and over and over, and that eventually paid out. See, is there a scenario where you don't demand order flow to be confirmed? For example, in the flow trading plan, I spot soul trading opportunities, and it is not always perfect if I demand 4 hour order flow to be confirmed. Yes, that happens quite a lot, to be honest. And this is again a little bit more advanced, but for example, for Australian dollar, US dollar right here, I do not demand order flow to be confirmed right here on the 4 hour to actually look for trade ID right there. So oftentimes when the time frames are combined in a certain manner, I do not want order flow to be confirmed, and I can already look to get involved. So what I mean by that is really I only look at 4 hour order flow to actually be confirmed when we are actively trading off of a monthly PD rate for the first time. So for example, if we were looking at this monthly value gap, then I would look at 4 hour order flow to be confirmed actually the first time we come into it right there, to then potentially look at 4 hour order flow confirmed, to then take a trade off the 4 hour right there. Other than that, a 4 hour fair value gap in itself is already tradable for me. Depending on the scenario, of course. I say that it is a very, very loosely, but depending on the scenario, of course. How do you deal with overthinking about concepts and feeling like you're not using enough concepts, or feeling like you're missing out on something while analyzing? Yeah, I think that's a huge part of trading, and I think that becomes so dangerous, and it's quite difficult. There's not really one objective answer, I would argue. It's convincing yourself eventually that less is more in trading. And I do not think convincing just happens by me telling you, hey, using less concepts is better than using more concepts. I've been through that cycle of where I used a lot of concepts. I used every single concept in the book right there, which eventually led me to the understanding I don't need all these concepts. I do a lot better when I have less concepts actually. So it's almost like seeing it for yourself. But next to that, it's quite a difficult answer to give you right there. It's yeah, it becomes a little bit doing too much, where I think social media plays a huge role in it. And I always try to blame social media as well, but I do definitely believe social media plays a huge role in it, because you have people that are using every single concept out there, but oftentimes it does not even work. So it's yeah, it's very difficult, very difficult. But personally, I don't deal with that anymore, because I've seen for myself that less is truly more, and that the less concepts I use is actually better than the more concepts I use. And yeah, from my experience as well, when I use, for example, commitment of traders data, it didn't work for me because technicals just played out. Very simply said. Let's see. I've never analyzed this pair before, I believe. Let's see, let's see. What are we doing right here? On the monthly, we have beautiful continuation higher, where we already have a nice premium rate we can look to target right there. Then on the weekly, what are we seeing? We have a weekly fair value gap right there, which we are currently respecting. That's quite nice. This is really nice price action overall. On the daily, what have we been doing this week? Let's see. Well, this week on Monday, we already reached a huge target right there, which is again all-time high, I believe, right? I believe it's an all-time high. Imagine it's just gold at an all-time high again. So when we do reach an all-time high, I'm a little bit more careful. That daily value gap is definitely what we can sort of play around with. And what I mean by that, when I say that playing around with, is that you do not necessarily want to go into that daily fair value gap the same way as you would go into a daily fair value gap that we might have to have at the bottom right here. Because at the bottom, you can go into the daily value gap to look for trades that you might eventually hold until we reach that high right there. But at this moment in time, that is not the case, because we are now at all-time highs. So the targets are short. They should be quicker trades, short time span trades. On the 4-hour, let's see, what are we doing? On the 4-hour, is really the only price action that we have, that we currently have, that we are dealing with. We are respecting it already. We again sweep that low right there of the previous candle low. Overall, we are not having the nicest price action here. Quite a big consolidation as well, where eventually we start to continue higher by disrespecting these bearish fair value gaps on the 1-hour as well right there. A little bit more difficult price action in my opinion. Quite rangy, seek and destroy like, very consolidating price action. But eventually it does reach the high, where I would argue, is there any good trade ID? Only real trade ID I would say is here on Friday, where the rest of the week is mainly waiting, because we are at an all-time high right there and creating fair value gaps going higher. Eventually it could be interesting when we do start to create fair value area that's overlapping with fair value gaps as well, if that makes sense. Let's see, Euro US dollar on Thursday, 4:30 a.m. Eastern. Those look like very confident trade. Take eventually, which failed. I think some people in the Discord took it. Yeah. To be honest, if you're already more advanced, then I do not necessarily think this is a good trade. And the reason I say that, because I think I already know which one you're referring to. And if I see Thursday, I already see stay out. Because right here, this happens, and not because it's a bad trade ID in itself. Well, we don't have time supporting ID. We have NFP the next day. So NFP will just simply mess around. It's designed to take out both sides of the market before we actually have a real move happening. So that is why I would argue it's already just simply said this right here is not a good trade. And the reason for that is because we don't have news supporting ID. But if we ignore the factor of news, then let's see if it is a good trade ID. On the 4-hour, I like it. I love it, actually. Fair value area, beautiful, beautiful, beautiful. I really like that as well. Then on the 15-minute, we have 15-minute fair value going higher as well. Beautiful, beautiful, essentially, that ST. On the 5-minute, what are we seeing? Let's see. 5-minute, we could argue price action here is not the nicest, but we do create an ST and then a re right there, which we could continue higher off of. Eventually even right there, a new fair value gap. That in itself, the price action here, beautiful trade. But again, why did it play out? Time. It's time. Let's see. Euro US dollar for this week. Let's see. So Euro US dollar was, it it was a tricky delivery. And what I mean by that is, if we take a look at the weekly again, just purely based on the monthly right there, how the monthly candle closed, we can expect higher price overall. So on the weekly, what are we seeing? We can just look to continue higher towards that swing high right there, eventually just targeting next premium raise as well. Then on the daily, what are we doing? Daily, we did not really have any clear discount raise to actually look to continue higher off of. So on the 4 hour was also quite messy right there until we actually reached the fair value area right there. But that eventually was where we then had no time supporting the idea anymore. So right here, if we do want to continue higher, then again, this fair value area is quite nice. We have a bigger retracement right there, and then we continue higher, where this then does become quite interesting. And really the only interesting day, in my opinion, where we have the 4 hour fair value gap right there. We have NFP stinging into it, which we can then eventually look to trade off of. Didn't really give a trade ID before it actually reached the highs as well right there. So eventually EU this week in my opinion, was just, there were a lot of better opportunities out there than EU. A lot better opportunities out there than EU. Maybe for a flow trading plan, there were some opportunities, but overall it feels very forced here. EU right there. Let's see. Where was I? Yeah, even when we come off a weekly value up, the 4 hour order flow is usually not confirmed. Like if we do not demand 4 hour ST or 1 hour ST plus RE, it happens, but 4 hours is not confirmed yet. Yeah, exactly. And why we use 4 hour ST then in that sense is because we already assume that lower time frame, so the 1 hour right there, is already confirmed. So why the Australian dollar US dollar trade right there of a daily PDA 4 hour ST is already valid, because we already see that 15-minute order flow is already confirmed by looking at the 4 hour ST. So it's the way we combine those time frames then right there. For the weekly is the same. The reason why we use an ST is because we already see that the ST plus RE is already confirmed, order flow is already confirmed on the lower time frame, if that makes sense. For being here. This will be uploaded to the website as well under the live session. And then don't forget to rest as well, because again, the weeks are quite, even though it's only 3 videos, we do have 3 live sessions as well. It's quite intense, right? To take everything in. So don't forget to rest and don't do anything. Very important. And then I'll see everyone as well around. All right, perfect. Thank you.